I know that Eric Sprott, I mean, after talking to him for quite a time, he said, Jim, where I really see the future, he says, is in the carbon credits. And the carbon credits, I mean, right now there's over 1 billion diesel engines in the world. I mean, if you do the math, I mean, even if we penetrate 1% of that, I mean, the market is so massive. And in the carbon credits, you take a long haul truck, I mean, it's averaging between $2,000 and $3,000 a year just in carbon credits. Now, and we have the worldwide patents on the means and methods of monitoring and monetizing carbon credits within diesel engines. So, I mean, you look at that future, you start doing the math. I mean,
Okay. Welcome everybody to Wall Street Reporter's next super stock company spotlight. Today, I'm speaking with Jim Payne. He is the CEO of DynaCERT. The stock symbol is DYFSF over the counter and DYA on the TSX. Jim, welcome back.
Thank you, Jack. It's a pleasure.
So Jim, we had you on our next super stock live stream recently. You gave a presentation. We had a tremendous audience, and what I wanted to do today is really get helping investors understand the story a little better. It will open up to some audience questions. We'll have a little live chat later. We'll have anybody in the audience is going to be free to ask questions. So that'll be fun. But for anybody that's new to the story, or they need to understand the story better, tell us, what is DynaCERT all about?
Sure. I mean, DynaCERT, I mean, first of all, the CERT stands for Carbon Emission Reduction Technologies. And that's really, what this company is and what we do. What we do is we produce hydrogen and oxygen on demand through a very unique and patented electrolysis system that is adopted to diesel engines. Our first to go to market has certainly been the Class 8, the big transport trucks. So we have a unit that mounts on a truck where, it is producing hydrogen and oxygen on demand at measured amounts to improve the fuel economy. It's interesting. I mean, if you go back 60 years, there's white papers talking about how hydrogen improves the internal combustion engine. The problem has always been, or certainly the challenge has always been, you've got to have the right mixture. And through our unit, I mean, it is very sophisticated. It has what we call the Smart ECU, which is the computerization. It takes information directly from the OBD port or the computer of an engine to determine the proper flow rates to optimize the burn. So by doing that, we improve the fuel economy, average 10 to 15%, and more importantly, we reduce the emissions clear across the board, north of 50%, right at the source or right at the combustion. This is where, we really stress this. We're not a filtration system. We improve the fuel economy, but more importantly, we give it a more complete burn. And by doing that, we reduce the emissions. And we've gone through great extremes to have this thing tested, certified, and verified worldwide through testing platforms. So this is not us saying this. And then lastly, what we have is what we call the Hydrolytica, which actually is taking real-time data, and then the end users can have this on a dashboard. They can have it on, there's an app they can download where this shows them the improved fuel economy. It shows them the reduction in greenhouse gases on a constant basis. It shows them monthly how much fuel they've saved, or annually, or daily, whatever they want. I mean, this is live, this is real time, and this is data taken right from the computer of an engine. So this is not us saying this. I mean, they have hard data. And, the one thing that, we've, just recently done with our Hydrolytica is now we have what's called the EFU, or the effective fuel utilization, where it's very important, especially for transport trucks. It's very important that they see the fuel utilization. So it's not just, we're not just saying it's improved fuel economy, but then it does a true comparison to the gross vehicle weight, to all the different conditions. So they're always comparing apples with apples so that they know that they, are getting the fuel utilization, the best possible.
Okay. So, basically, so our audience is primarily interested in what's the upside for the stock. And, you've had some major investors come into the stock. I know you have a lot of institutions. We were just talking earlier about, you had like really an oversubscribed offering. It was like 3-to-1 almost, and you have to turn out a bunch of funds. You have, of course, Eric Sprott, who, a lot of our audience knows, legendary investor in Canada across, the resource side. I mean, the guy's like a Warren Buffett type of guy. And so I think, so I guess the question is, why are these guys interested? So what is the market opportunity that you're going after? And talk about the carbon credits. Like, what is the big picture here? Like, why are these guys so interested in this stock?
Well, they're certainly interested. I mean, first of all, we have the only company worldwide that has had this, which is proven. I think I mentioned last time, we just in the last week got certified and accepted through the United Nations Smart Sustainable Cities. I mean, this was huge. But, really, I know that Eric Sprott, I mean, after talking to him for quite a time, he said, Jim, where I really see the future, he says, is in the carbon credits. And the carbon credits, right now there's over 1 billion diesel engines in the world. I mean, if you do the math, I mean, even if we penetrated 1% of that, I mean, the market is so massive. And in the carbon credits, you take a long haul truck, I mean, it's averaging between $2,000 and $3,000 a year just in carbon credits. Now, and we have the worldwide patents on the means and methods of monitoring and monetizing carbon credits within diesel engines. So, I mean, you look at that future, you start doing the math. I mean, we maintain 50% of the carbon credits, and through a subscription agreement with the end user, they can qualify for 50% of the carbon credits. Now, I should say this is the future carbon credits. I mean, because carbon credits exist now. We are working with Vera, which is the certification process, for the carbon credits, so that every end user that uses our product has that availability for these carbon credits.
Okay, so your device. Okay, so let's say let's just start talking. I know you were doing stuff with ships, with locomotives. Well, let's just talk about the truck market, like the tractor trailers. I guess they call the Class 8. Is it? That's the name. Right. What exactly? So what are they buying? What's their why do they want to buy it? Like, what's in it for them?
Well, I mean, there's multiple things. I mean, you look at the return on investment on it. I mean, first of all, you look at
what's the price.
So our price in Canadian dollars is just under $10,000 installed, unit. So they look at that, and then they look at the return on investment. Okay. At 10% improved fuel economy, their return on investment is average between 9 and 12 months. So less than 1 year, they've got that return on investment. That's not counting, the improved, the emission reductions. That does not take into account so many other things that equate to it, and that does not take into the equation the carbon credits. So the return on investment is very significant right out of the gate.
Okay, and now, so basically, so they get the fuel savings, they got improved with the engine performance, etc. And then there's that upside of the, they're going to get, what is it, $1,500, $2,000 in carbon credits.
Correct.
Okay, and so they're basically making money in the deal now. Do you have, like, how do you make it a no-brainer for these guys? I mean, do you offer financing or anything, like, so that they don't have to pay $10,000?
Yes, as a matter of fact, just over, I think about 4 months ago, we made an announcement to that effect. We just set up a subsidiary, which is DynaCERT Investment Strategies. We call it DISH, which is 100% wholly owned subsidiary of DynaCERT, where we are now offering, through some of our dealers, a subscription agreement where it's like a lease. They just pay a monthly payment. They put these units on, and so this thing is paying for itself, right out of the gate.
Okay, so right out of the gate, let's say a guy has 100 trucks. It's a fleet of. Is that like typical? I mean, I don't know.
There's a lot of fleets out there in excess of 10,000 trucks.
10,000 trucks. So somebody has 1,000 trucks. Let's say he's he's 1,000 trucks on the road. He signs up. He basically is cash flow positive. He's making money essentially from day one.
That's correct.
Does he have to write a check to you on day one or no? Like when he signs the deal?
No, first of all, I mean, he deals with our dealers. I mean, we work through a dealer network, but through our dealers, I mean, they now have this ability where they do, subscriptions. This was first set up by our largest dealer here in North America, which is Carbon Clean, where they offer subscription agreement. So no, I mean, they put the unit on and they pay a monthly fee, and they're cash flow positive from day one.
Okay, so I mean, really, and this is like a no-brainer decision.
I would certainly think so. Yes.
Yeah. Now, one thing you mentioned, which is interesting, you mentioned like in terms of adoption. Look, I mean, the truck industry. I mean, it's kind of it's more of I guess a conservative industry. People, it's more like show me, right? You mentioned kind of a comparable of adoption in the presentation. You talked about those what do you call the truck skirts? Those skirts that you see.
The trailer skirts, yes.
How did that happen, and what do you see as the comparison with what kind of how that adoption happened and how this could relate to dynaCERT?
Well, I mean, there was an analyst report just put out last week, and they had done a very, very good job doing the comparable on that. I was in Kentucky at North America's largest truck show 10 years ago when they first launched these skirts, and it was interesting walking around. And every trucking company I talked to, they all said there is no effing way we will ever have those on our trailers. Today, they have penetrated 90% of the North American market. You are so hard pressed to see a trailer anywhere in North America without these skirts. Same thing in Europe. And now you look at these, I mean, their average cost is $3,000 for a trailer. They improve the fuel economy by 1% according to the stats. You look at $3,000 investment for a 1%, improvement of fuel economy as opposed to a $10,000 investment for a 10 to 15% improved fuel economy, plus the emission reductions, plus the carbon credits, plus the extended engine life, the extended oil life. The trucks do not go through, the regens and all this. I mean, the downtime of the trucking industry. And this is one of the things. We've actually got a new dealer just signed up, and he said, Jim, the fuel economy is great, the emissions is great, but he said, the reality is, he said, where we see the biggest advantage, he said the downtime in these trucks because of the DEF, the DPF, and the regen systems that they have to go through. This creates such a problem and such a downtime on these trucks. With our units, it reduces the use of the DEF, DPF, and the regens so significantly. They say your unit pays for itself just in the reduction of downtime.
Oh, that's a big plus. So I mean, I don't think you can even compare it to the truck skirts, because I mean, this thing basically you're making, when you install this, essentially you're making money day one.
Absolutely.
And so it's a massive savings. It seems like a no-brainer. I guess the real question is market adoption. How quickly can you adopt? So what's the what stage are you at now? Are you in market? Like what you got? Like what's the revenue picture? What's the pipeline gonna look like?
So, I mean, the pipeline, I mean, right now, I mean, we've recently, announced, I mean, as everyone knows, we've just got back, our assembly plants just got back running, I think 2 weeks ago, because we were 4.5 months shut down because of COVID. Right now, we've got a backlog of which we had announced orders, it's between 4,000 and 5,000 unit backlog that we've got to fulfill right out of the gate.
You have a 4,000 unit backlog.
Correct.
So okay.
Now these orders.
Okay, so I'm going to do the math. So that's basically 40 million in sales. Or no, 20. Wow. Basically, you sell your
wholesale. So our wholesale cost, our wholesale is roughly 6,000 or 6,200.
Okay. So you're talking about 25 million roughly revenue pipeline. I mean, unofficially.
Just in a backlog. I mean, since then, I mean, we will certainly be announcing, additional dealers and additional orders, that are coming down the pipeline also. So
just to be clear, I mean, I'm sure. Okay, so essentially, this is not a company which is, it's not a concept stock. I mean, you already have. Not only do you have, I mean, you actually have people who've ordered these devices.
We've got people ordered. We've got units out in the field all over. Reality is, I mean, some of our dealers here in North America, now they started out with a pilot project, which they had announced before the COVID, where, there's some of the largest fleets here in North America, have like 10, 15 units on that they've been running pilot projects. Reality is our product has met and exceeded, the expectations, or what we have publicly said to expect. So, we certainly, you look at the adoption rate. We look at the adoption rate of these skirts. I mean, what happens? It takes, one or two of the large fleets to start putting this on, and then they all start following suit. I mean, as big as the trucking industry is, it's small, it's tight.
Well, it's more of like, it's a little bit like lemmings, like in certain industries, people are very conservative, but when they see one guy do it, then they all fall like dominoes.
Sure.
So the bottom line is, so you got this backlog, it was 4,000 plus units. Can you talk about, I mean, I know you guys don't like to make projections, but like how many units do you think you'll have out there in 2020?
Well, I mean, even if we just fill our backlog, I mean, the numbers are substantial. But and you're right. I mean, we do not, put out projections or forecasts. We have, we're very, very conscientious of that, and we've just graduated from the Toronto Venture Exchange to the Toronto Stock Exchange. We want to make sure that we stay crystal clean with these guys and make sure we play by the rules.
Okay, so basically all the revenues are going to be surprises, so people should watch the news flow. What I'm trying to get a handle on is the growth curve. I want to see how long did it take to get this pipeline? Because the adoption rate, the growth curve, I guess the key is, are you going to go from, let's say 5,000-6,000 units this year, and there could be 50,000 units next year on the market, or 100,000, whatever the number is. Because ultimately, I think the real profit is those carbon credits, because that's pure. I mean, that goes right to the bottom line, pretty much, right?
That's the razor blade for sure. But I mean, let's look at it. I mean, we've just put in a whole new assembly line, which we just got opened up. It right now has a capacity of 100 units a day. So I mean, if we were putting out 100 units a day, and that's based on a 1 8-hour shift. Now we can double that and triple that by putting in a second and third shift. So the numbers, grow so exponentially. We are also in talks right now and negotiations in Mexico to open an assembly plant there, and in Europe to open an assembly plant there, because we have dynaCERT GmbH, which is a wholly owned subsidiary of dynaCERT here in Canada. In Europe, where we have a huge marketing opportunity, we have worked with TÜV North and TÜV South over there to have our product homologated so that it could be sold throughout Europe. And so, yeah, I mean, you start doing the math. I mean, the numbers really do grow quite quickly.
Okay, so I kind of looked at it as there's probably I think there's about 100 million trucks out there, right? Just the truck market.
It's actually larger than that. It depends on which market we're talking at, but yes, I mean, it's very substantial. I mean, there's over 1 billion diesel engines, but I believe it's over 200 million trucks out there right now. So
okay, and so again, even that 1%, that's basically a couple $2 billion to the bottom line at that point. So it's an interesting opportunity. So right now, the market cap of the company is what? Is a couple $100 million still?
Yeah, right now I think the market cap is we're just over $250 million right now.
Okay, so 250. That's Canadian.
That's Canadian, yes.
Okay, so now it's the Canadian dollar is going up, so it's about 200. So it's basically, it seems like a compelling bet, for that type of.
And the good news also in that, Jack. I mean, reality is, I mean, we are a debt-free company, and we're sitting with close to $20 million in the bank. So right now, I mean, we're in a very, very solid position, and we're not a new company. I mean, this has taken 16 years to get where we're at. It's taken over $50 million to get where we're at, but the research and development is done. Like, we have proven product out there right now. I like to say we're a Canadian company with a global solution to reduce pollution.
And I think you mentioned that your goal, I mean, I think you've said is that you want to turn this into you see this as a Fortune 500 company.
Personally, I do. I mean, personally, I see the future of this as a Fortune 500 company. I tell people we're a Fortune 500 company. People just don't know it yet. So
exactly. You're telling them the truth in advance.
I'm certainly telling them my vision.
Exactly. So, I guess the big elephant in the room, which is everybody's talking about, is electric, right? Like, you have, there's a couple of, I think Tesla's developing an electric truck. There's a couple of players out there. Everybody's talking electric. How real is that? Something that you see that as a competitor? How does this compare? Like, is diesel going to go away next year? Like, what's happening?
Jack, I think reality is diesel is not going anywhere for a very long time. I don't feel threatened at all by electric. Now, is there applications for it? Absolutely. I'm not gonna say there's not. I mean, you look at delivery trucks and stuff like that. I can tell you, we've got a major grocer chain here in Canada that is using our product. They were one of the first ones to put a deposit on, I believe it was 5 of Tesla's trucks, and they announced it. So I called them up, because I have a very good relationship with them. They started laughing. They said, Jim, it was the cheapest PR we've ever done. They said the reality is, for long haul, they said, and it'll work, for around cities, deliveries and stuff like that. They said, but let's be honest. They say, first of all, you look at the battery, the amount of weight in the battery, that takes away 1/3 of their payload. He said, so there is, the economics are gone. He said, secondly, these trucks, when they're new, at best run 8 hours on a charge, and then it takes 6 to 8 hours to recharge. Trucks here in North America are running 24/7. They put in 2-3 drivers and they're going nonstop. The economics are just not there, for the highway tractors. But then also, if we start looking at the infrastructure of electric, and I know, everybody's excited about electric cars and electric trucks and stuff like that. If the world tried to go there, the world would crash overnight, because we do not have the infrastructure anywhere in the world to support this, to support the electricity. This summer, here in Canada, and I know we're not near as hot as what you are out where you are, but here in Canada, where I live just north of Toronto, we lost the power 5 times this summer because of the load from the air conditioning. The infrastructure couldn't handle it. And now if we started adding in electric cars and electric trucks everywhere, where people were trying to plug these in to charge them up, we'd be in big trouble.
Yeah, California right now has rolling. I think they have rolling blackouts because they can't handle the load, and because I think they went green. They're trying to do a lot of like renewable energy, and the renewable energy can't really give them the electricity when they need it most. So the electric vehicle thing is not something that's going to be, anywhere at least let's say 15 years, probably 15 years more.
I don't see it as a threat to what we're doing whatsoever. I really don't.
But you still have also like ships, or like you have ship. There's
trucking. Our first go to market was the Class 8 trucks. We are now on delivery trucks. We're now on buses. We've got municipalities adopting this technology now for municipal buses and stuff like that. But then, you get into mining, we really start penetrating the mining industry. And then, we've got shipping and rail. You look at ships. You look at a container ship. Like these things, put out the equivalent of 50 million cars per annum in pollution.
A single ship?
One container ship.
And how much would your device? How would you can adapt your system to a ship like that?
We can. We've got multiple sizes, so we can adopt it to any diesel engine. We actually did a pilot project on a 10,000 horsepower engine. This is one of the biggest Wärtsilä engines out there in the world. So sure. Our technology, it's scalable. Currently, we've got a smaller unit for delivery trucks, buses, and reefers or refrigerated trailers. Now you look at the refrigerated trailers. Actually, a grocer chain here in Canada asked us if we could develop one for that. There is 3 times more refrigerated trailers or reefers in North America than there is trucks. And these things sit 24/7 with a diesel engine running to create the refrigeration for these refrigerated trailers.
Back to the shipping industry. From what I understand, the shipping they had to switch to a new, or they're switching to a new form of fuel which has less pollution, which is causing a lot of kind of disruption in the industry. How would it be the same kind of process? Like, when are you going to enter that the ship market?
But it's certainly the same process. I mean, it's the same technology. I mean, you look at heavy oil, you look at bunker fuel, you look at the different grades of diesel. I mean, they're all burning diesel. Now, when I said we did a 10,000 horsepower Wärtsilä engine, this one was burning heavy oil. It's actually a lower grade oil than the bunker fuel of which the container ships are currently running. I mean, this oil was so thick, it was like tar. It had to be preheated so it could be flowing in or pushed into the engine to burn.
Okay. Okay. So we got a bunch of questions coming in. We're going to jump to the questions in just a second. I want to get so in terms of the shipping, would it be the same type of process where you would where they could be cash flow positive from day one? With financing.
Yes, and the same thing even in the mining industry, and this is where the mining industry on these big equipment that they're using, they've came back and said 5% fuel economy. They are cash flow positive. I mean, this thing, their return on investment, is 8 to 10 months at 5% improved fuel economy on these. I mean, these guys are burning like $1 million plus in fuel a year on one piece of equipment.
Wow. And I know for sure the shipping thing is a huge. I mean, it's massive. Massive opportunity. I mean, that's so there's a lot of stuff out there. And I guess again, it's a kind of a no-brainer decision. So I guess the question is how fast. I mean, the question for the market is really how fast is it going to scale? I mean, that's and then when do those carbon credits come in? When is that going to happen exactly?
Well, I mean, we've been working for 2 years now. We've been working with an expert company in the UK because that's where this all was originated, and now we're working with Vera. How quick? I mean, my crystal ball is not real clear. I would hope to say it's going to be at some point this year.
Okay.
We are certainly way down the road with this, but reality is, Jack, I can't give a definitive answer to that. But that's the main reason why basically Eric Sprott, is that the Eric Sprott concept, the carbon credit? Eric Sprott said by far, he said, Jim, I see the future is carbon credits. He said, I cannot find a company better positioned anywhere in the world to take advantage of that than DynaCERT.
Last question before we jump into audience questions. In terms of, you're kind of in the clean tech space, you have these ESG funds, these social responsibility, whatever, or eco-friendly stuff. Do you have any institutional? Do you have any funds, any shareholders who own your stock right now in that space, or have they started buying yet? ETFs?
They have started buying, and it's interesting. And we had no real institutional. Everything we had was outside of the institutional until recently. Now, as we were graduating to the Toronto Stock Exchange, we had met every criteria, but the Toronto Stock Exchange came back and said, you got to do one capital raise where it's done a brokered deal. So they had to, and as you get into a brokered deal, I mean, there's so much due diligence has to be done and signed off on. They ended up, there was 5 brokers came together as a consortium and wanted to do it. And not because it was such a small capital raise, but they said, the future is so huge in this, we want to get involved. They did an overnight deal, a bought deal, and they raised $21 million through institutional overnight. We pared it down and we accepted $8 million because reality was we were already in such a good cash flow position, and we did not want to dilute the stock that much at these prices. But so institutions, came in at that point and are now, certainly coming on board.
Okay. So let's jump into questions. Here we go. Is Austria Carinthia? You have a deal with Austria Carinthia?
We do. We've got a deal with Austria and Carinthia. Is it done? No, it's ongoing. As a matter of fact, there will be an update coming out at the end of this month on that. It has actually, grown substantially, but so we had initially announced a pilot project with them. But yes, it's still ongoing.
Okay. I guess he's asking, is it because you have a monopoly? Is there room for higher price tag and better margins?
Well, is there possibly? But do we want to go there? No, we've really worked very closely with the trucking industry and everything to find that perfect fit. I mean, you look at our margins. I mean, we're already at, huge margins on our product, and but I think we've got it priced right where the return on investment is good and everything like that, where it's a win-win situation for everyone.
Okay. So this guy, I can't read Chinese, so you should change your name to English. Otherwise, I can't pronounce your name. I don't even know what it says. So, are you doing anything with ships? And I guess you can see the question, right?
I can see the question, and we've just initiated this. We've got actually the first ship is being done. I mean, the product was ordered, manufactured, and delivered just before COVID, and this is in Germany, and so it's just being organized now to fly over there and work with them for this first installation. And then we're working with one of the largest shipping companies out of Dubai right now to do exactly that also.
Okay, this guy's the best questions. So, are you increasing capacity, or can you scale manufacturing? I guess is the question.
I think I mentioned that earlier. Yes, I mean, we are certainly looking at doing that. Like I said, I mean, right now, we mentioned what our capacity is here. We are currently in talks in both and negotiations in both Mexico and in Europe for an assembly plant there, and we've got talks ongoing in India for an assembly plant there also.
Okay. Chris is asking here: Are you doing anything to get the module into premium cars?
Into cars. That's a great question. And yes, I think we actually announced that earlier. We are working with Molsolf Group in Europe. Molsolf Group is a massive company in Europe. And so, I mean, they were the one that initiated this for the premium cars. And, certainly in Europe, they're in love with their diesel cars and stuff like that. And so matter of fact, Dr. Molsolf is flying here. We've got a meeting with him in 3 weeks where we're spending a few days, in further discussions for this.
Okay. Let's see here. What else do we have? Questions? Okay. Fuel economy question. Can you see that question, Jim?
Report the pit group. Yes, I mean the first test. I mean they openly admitted there was problems with the truck. It had nothing to do with us. Had nothing to do with the product. That's why it was redone, and it was actually 5.9%. Now, but here's the way the pit group works. Now, the pit group, I mean, they are the gold standards within North America. They put a truck at its optimum performance. They want to see if you can improve the fuel economy at its optimum performance. So they literally had a truck which they brought up to 100 kilometers an hour on a flat oval track. They drove it for literally 100 kilometers, around the track, and then so they set it. And then once they were done, they wanted to see if they could improve the fuel economy at its already optimum performance, and they were able to improve it by 5.9%. They actually publicly put a statement in a press release that was a result to be envied.
Okay. When is JP coming to Europe?
When does JP come to Europe?
Yes, it's you.
Now we got 2 JPs. As my
Okay.
I mean, our VP of global sales literally just got back a week ago. He was just there for 2 weeks working with our dealers.
Okay. Upgraded HG1.
The upgraded HG1 that the JP was talking about, that is released now. We press released that. I mean, yes, we, through the 4.5 months downtime, I mean, we made a very substantial improvement on the HG1 units. We were originally going to launch that at the end of the year for next year, but we chose to launch it right out of the gate, right after right when we opened up. So it is a launch now. We already announced that.
Okay. How many units sold and any reorders from same clients?
I mean, we've got clients that have reordered. We have one client that just reordered this week again. But yes, we do have clients now. A lot of these clients are, I mean, first of all, like I said, we work with dealers. So the dealers are the ones selling to the end users. These dealers have, these large fleets that they're working with right now that right now we're under NDA. We cannot disclose it until they choose to disclose it because they are public companies also. When they go public with this, at that point, we will. And we're very anxious to.
Okay, question about backlog.
What the iron? Yes, that's exactly what we're doing now.
So, like, what's the timeline for completing the backlog?
Well, at 100 units a day with a backlog between 4,000 and 5,000 units, now we've also got additional orders coming in on a daily basis. So, but we certainly, are working to fulfill these backlogs.
Okay. Okay, the guy's saying there's a big demand in the Middle East. There's a currency conversion problem. Can you solve that?
We're working directly. We have dealers on the ground in the Middle East, and so now what we market to them is in U.S. dollars. How they do their conversions, it's out of our control.
Okay, I'm sure they can adapt. I mean, they deal with stuff all the time. I mean, like they adapt.
And the U.S. dollar is a worldwide, accepted currency. So outside of Canada, everywhere else, it doesn't matter if it's Europe, Middle East, where it is, everything is being sold in U.S. dollars.
Okay. Okay. No other questions yet. So Jim, before let me ask you in the meanwhile, what's kind of the big picture? What's your goal for the company? Like, what is DYNASERT going to look like? Let's say 2 years from now.
Well, I can honestly say the company is growing exponentially. If you look at the growth we've experienced even in the last, year or two. Now, I mean, I took over this company 6 years ago. You look at the company where we are today. I mean, we've got a proven product and it's proven worldwide. We have now got, now we've just broke the 40, just over 40 dealers worldwide. The dealer network is growing. It's growing very quickly. So with that, I mean, the sales will grow very quickly. The profit margins, like I said, they're really great. We add into the carbon credits. I certainly believe that we will be a very healthy cash-wise, company. And I truly believe we're a Fortune 500 company. I believe this company is going to outgrow me, and I welcome that. I will always be part of it. I never want to, walk away from this company. This is my heart and my life in it. I've got 9 grandchildren. It was very important to me that I could leave this world a better place. And I look at DYNASERT. This is one thing I really think, COVID did, COVID really forced the world to take a breath of fresh air. It's really interesting. I mean, you look around now. I mean,
they're improved in a lot of cities.
It has. I mean, there are so many places where, kids are seeing blue skies for the first time. This first time in decades, they're seeing blue skies. They're seeing mountain ranges for the first time in decades. They're seeing blue water for the first time in decades. I mean, this has, really forced us to give the world a breath of fresh air. And I cannot believe for a second that we're just going to say, turn the key and let's go back to where we were. And that's why I think DYNASERT's potential is so huge right now, because we've got a product right now that makes such a significant difference in reducing these emissions, at the same time paying for itself, where companies, they can take a very proactive step in improving the fuel economy or improving the emissions and improving everything worldwide. At the same time, it's not costing them. Yeah,
no, it's interesting. Okay, so I got another question right here. Update about new dealers and orders.
Yes, as a matter of fact, there is press releases being worked on as we speak. So we will certainly be keeping, people updated. Now, we are behind. COVID is behind us. Summer is almost behind us. We have, a great expectation of quite a strong flow of news.
Okay, and I guess he's asking about, are you going to have any kind of data you're going to be putting out about, performance, something which will help, further market product?
Well, I mean, if you look at some of our dealer sites, I mean, they're already putting out these trials and the results. I mean, as a public company, especially as a Canadian public company, we cannot put testimonials. I mean, we have put out, everything that's been done, like you look at, we've got third-party accredited tests from TÜV North and TÜV South in Europe. From, we've just recently, got homologation in 7 different, so our product all across the Middle East and the United Arab Emirates. We've got it through ICAT in India. We got it through Pit Group here. So all those are third-party accredited. We put those test results out. We as a public company cannot put out testimonials. Certainly our dealers are doing that. You look at some of our dealers' sites, you look at Carbon Clean sites. I mean, they're actually putting out, their ongoing trial results, and they're phenomenal. They really are. I wish I could put them out on our website, but legally we can't.
So question. In terms of what do you have coming up over the next, let's say, 6 months? Because a lot of investors they have a short-term mindset. What kind of news flow? What kind of milestones do you have coming up for the next 6 months that we can keep track of?
Well, I certainly think over the 6 months, like I said, I mean, we've just put COVID behind us. People know we've got a big backlog. I mean, so obviously, you look at our first 2 quarters of this year. They're going to be pitiful. I mean, other than the fact that the company is growing and other than the fact that it's debt-free and in a very healthy financial position, we couldn't sell, we couldn't do anything, I mean, other than research and development. And we very aggressively, because that was the one department we could maintain and keep going. So we very aggressively, worked on that, where we have so improved our product line, but also extended our product line, for this bigger stuff, for the shipping, for the rail, for the mining and stuff like that. So there will be a lot of announcements coming out concerning that. There's certainly, like I said, our dealer network is growing very quickly with that. The orders will also, and we are very open to, as those purchase orders come in. Now, I mean, we get purchase orders on a daily basis, 1, 2, 5, stuff like that. We're certainly not going to be announcing that. I mean, that will show up in our financials, but certainly, as new dealers come on with substantial orders and stuff like that, we will continually be putting those news out. But I think also in the mining industry and stuff like that, there's some, a lot of things going to be coming out in the near future.
Okay, the last question, which we always ask in these interviews, is, Jim, what top 3 reasons why investors should consider DynaCERT shares today?
Well, I mean, I certainly look at this. I mean, ESG is the big talk in the investment world right now. I don't think you can find a company better positioned for that. Certainly we talk about the carbon credits and the future of the carbon credits. I mean, the economics of that is so huge, and we are so well positioned, and we are the only company in the world that's got the patents and everything to be able to do this. Certainly sales, are going to, we have gone through the research and development. We've gone through the whole process of having this thing proven worldwide. Now it's a matter of marketing and sales, and and we're there. I mean, we're pushing this thing. We're pushing this thing now. We've got a product that's working. It's working on a continual basis. The results are phenomenal. The fleet managers and the companies that have been running pilot projects are all very excited about our products. So I really think we will. I think we're in a very good position for exponential growth.
Okay, so I mean, the key takeaway for me really is you have this backlog, so obviously it's working. People are buying the product. It's a no-brainer decision for the customer because essentially their cash flow, they're making money from day one. They don't have to be out of pocket. They don't have to, with the financing or leasing, what have you. They're just basically signing a piece of paper and they're saving money or making money with carbon credits right away. So I guess the real question is how
just with the fuel economy, they're making money, like just the fuel economy more than pays for itself, and then you add all the additional benefits.
Yeah, the telematics, all the data. So it's especially for big operators, and so yeah, I guess the real question for the market is how exactly how fast is this going to scale so that when are we going to see you on the Fortune 500? So So,
Well, I firmly believe we're just into that hockey stick curve now. So.
okay, because Jim, I think one thing I didn't mention maybe in the interview is our goal obviously with the next Super Stock conference programs is to introduce our audience to stocks which have 10x to that 100x upside. So that's what we're looking for. Jim, I want to thank you for your time, and we look forward to hearing more from you and DynaCERT in the coming weeks.
Thank you, Jack. It was a pleasure.
Thank you, everybody, for joining us.